A GGGGM, everybody. Blake here with Trade Tracer. As always, none of this is financial advice. Trade and invest at your own risk. This video is designed to help you get prepared for this week's trading. Let's go ahead and get started. We have the S&P SPY pulled up here on a weekly time frame. I want to start on the higher time frames this week just to kind of highlight, where we are in the macro trend. So you can see we are breaking below the 10 and 50 week moving average. You can see over the past few weeks, we came up, tested the top of this 50-day or 50-week moving average, and then from there we had a massive reversal, selling off, and then last week gapped below the 10-week moving average and closed near the lows. So not the type of week that you want to see if you are a bull. Ideally, you want to see prices back above these levels. And just for reference, this 50-week moving average nicely coincides roughly with about the 200-day moving average. So when we take a look at the daily, you'll see what I'm referring to. Regardless, this is a downtrend on the macro scale. And yeah, we have rules to trade short. We are below the 10-week moving average. And next week, this trading week, if we close below this trading week's low, yeah, watch out below. I think, there's a very high probability that we come back into, this range, right in here if we break these lows this week. So be very careful. Not the type of trading environment that you want to see if you're bullish or if you're a long-term investor. This is not what I'm rooting for, but I trade price and I trade trend and momentum. And right now, all three of those things are telling me that the odds are favoring lower prices over the long term, right? Because this is the weekly time frame. So we're expecting lower prices, and we are going to be prepared for that in our investment portfolio. So let's go ahead and take a look at the daily time frame, and I'll pull up the 200-day moving average so you guys can see exactly what I was referring to. And boom, there it is. Came up, tagged it, and just got rejected and sold off much, much harder. And you guys remember, we were playing this uptrend very nicely. We talked about this bull flag, and how we can, if we got back above this level here, we likely could come and tag the 200. That's exactly what happened. And then, yeah, when we broke trend on this day here, this was, I believe, a Friday. Yeah, that Monday we gapped down, chopped around, came back, tested the 10 SMA again. And once we tagged that 10 SMA, which is the top of this cloud, boom, massive selling day. And then, yeah, last week, yeah, not great either. Broke below the 50, hung out, came back, gapped up higher towards the 50-day moving average on non-farm payrolls. And then we received that data and the market digested it, and we wound off closing near the lows. Didn't close below Thursday's low, but we did close not great. Absolutely not great for this downtrend. So we are in a multi-day downtrend. We're in, let's see, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11-day downtrend on the S&P 500. So what do we expect this week, right? How are we trading this week? Once again, as always, in downtrends and no trends, our priority is always preserving capital and waiting for these uptrends that we can capitalize on. So this was the fourth uptrend right here that I'm circling of this year, and it was the best uptrend of this year. All right, so maybe we'll get 2, 3 more uptrends this year. Hopefully, we'll see how this year closes out. But as of now, we're in a downtrend, and so we have to respect the trend. And so this week, I'm not going to be doing very much trading at all. If I do any sort of trading, it will be with 5-minute RT. That's 5-minute rules to trade, just a different time frame with futures, right? So it'll probably be ES or NQ. And that's not for everybody, but it fills my need to trade. And, I can take smaller sizes and scalp some things here and there. And if I'm lucky, if we go into an uptrend, I'm in early. But regardless, this week is a pivotal week. Like I said, if we break below Thursday's low, very likely that we come back into this range in here. So be very careful. And yeah, right now, seeing this Friday's close, tag the 50, close on the lows, That's not what you want to see, right? It's very high odds that we continue lower after putting in this type of candle on Friday. So just be cautious, right? Don't be trying to be a hero and calling a bottom. That's not how we trade. We like to see price back above the cloud. We want to see price back above these levels. We want to see price in here before we start, allocating new long market exposure. And, we'll put our stop at a previous pivot low or previous day's low, depending on your risk profile. And then, we'll ride the trend until it ends, right? We'll scale some profits on the way up, put our stop in, move our stop to our entry. Same thing we always do every single time. It's nothing different. It's just about being disciplined and having consistency in doing that. A lot of traders, they make the mistake of trying to trade every day. And that just doesn't work for everybody, right? You really have to cherry pick when you trade, not only the types of trades that you take, but also when you're trading. Are you trading in an uptrend? Are you trading in a downtrend? Is there no trend? How long have we been in an uptrend? Are you just getting in on an uptrend after 10 days of uptrend, right? Those are the types of things that losing traders do. So just be cautious. Don't try to force anything this week. This price action does not look healthy. Just be careful. Now, with that said, we are in a prolonged downtrend, 11-day downtrend. It's been really nasty. So I'm expecting some sort of bounce. We're getting close to oversold levels on the NIMO. And it doesn't always have to bounce, but the technical analysis, the technical analyst in me would not be shorting here just because it's a great place to trap bears. All right. So I'm not shorting anything down here. I think this could be a great bear trap. Maybe we come up, back to this cloud and roll over again, or we just break these lows and boom, come automatically down here. So I'm not trying to predict anything. I'm just reacting to price. So this week, play it safe. We are in a downtrend. If you might have some good opportunities with some 5-minute RT long, considering we are getting to these oversold levels. For a nice day trade on the long side. And you never have to short the market. I'm always letting you guys know you never have to short the market. It's much easier to make money in these uptrends like this one here, like this one here, like this one back here, and this one here, which lasted just a few days. Okay, so 4 uptrends this year. It's easy, in my opinion, if you are consistent and you get good entries and you define your risk. It's easy to make money in uptrends. It's very, very, very difficult to make money in downtrends. So just be patient, right? Just be patient, wait for the next uptrend. And like I said, if we break below these lows, high odds we come down here. If we get above the cloud and we start to bull flag, then I'm going to be interested. And maybe we have a great setup for a new long. That'd be really bullish, actually. If we held these lows and we trapped bears below the cloud, getting everybody bearish again, the market's going to roll over, and then we trap the bears, get above the cloud, bull flag, and then take off, that's exactly what I want to see. I would love to see that price action. That would make me pretty bullish, actually. But until that, I'm still bearish. I'm still very cautious and protecting capital. All right, so let's talk a little bit about crypto. You guys know I'm big into blockchain, Web3, all that kind of stuff, NFTs. Yeah, still have this chart up. Got back in here at the 1270 level. It's been a decent trade. Doesn't look great. We're still below a 50-day moving average, but Ethereum is back above 16,000. I like to see that. We have a merge coming up, so who knows what's going to happen going into that merge. There's a lot of people saying a lot of different things. So for me, I'm going to react to price and trade price. Like I've been saying this entire year, pretty much, if you're a long-term investor, if your time horizon is, more than 3 years, I think these are fine levels to accumulate. And same thing goes with Bitcoin. Bitcoin showing relative weakness compared to Ethereum. So I do prefer Ethereum still over Bitcoin. Yeah, Bitcoin not in the cloud. We had a very important 22,000 level broke back below that, back below the cloud. And yeah, things don't look great in crypto land, but these things can turn on a dime. So once again, same thing with Ethereum as with Bitcoin. If your investment time horizon is longer term, more than 3 years, I think these are great levels to accumulate. Maybe it goes to 15,000, and I would be a big buyer at 15,000 on Bitcoin, and I don't think it would go below 15,000. If it gets to 15,000, I think you're going to have a lot of people backing up the truck and loading up some Bitcoin because the technology, in my opinion, is undeniable. So crypto, not in a great spot. Could go lower. I think it's fine to accumulate down here. Lastly, let's talk about energy. This is our biggest holding in our investment portfolio. Currently, our stop is at this 74.88 level. So if we break below this, then we're probably going to get out of energy, and that means the market is probably on full-on bear market mode. And maybe we start looking at some inverse positions on the market. So keep a close eye on energy. So far, it has showed relative strength. We're still well above the 200-day moving average. We've held this 200-day when we came and tested it back in July. So I like energy. I think it's the strongest sector in the market. And you guys know that's what we focus on. We focus on relative strength. So energy's showing relative strength. So in our investment portfolio, we're at an allocation of 60% on XLE. So I think that's where you probably want to park your money if you don't want to, short anything or, take any inverse positions. I think energy is where you want to be if you're trying to park capital. Well, let's go ahead and wrap it up. This week, I'm going to be paying very close attention to, a few levels on the S&P. I'm just going to mark them in here. 390 on SPY. And 406. We'll call it 406. So in here is just, this is a no trade zone in here. I am not trying to trade in here. This is where you get chopped up. Below this, I think it's a pretty high odds, like I said, that we go down to probably the 476 or 376 area on SPY. And above this 405, 406 area, we'd like to be back above the cloud. I'd be patient, but I would be optimistically, hoping for some sort of consolidation, bull flag, and then a break. So that's how I'm playing this market. I know it's it's going to be boring because we are in a downtrend, and I'm protecting capital. So see you guys on the open.